If you want to get financially independent, I'm here to tell you that it can be done through investing in good assets, and it's a lot simpler than a lot of gurus make it out to be. Now, most of the investing advice out there is just overcomplicated, and that leads to a lot of people losing money or just becomes unsustainable because of the amount of work involved. But in this short video, I'm going to show you just 3 things that if you do right will unfuzz your investing mind and lead you to being able to create wealth and income to be able to afford to live a purposeful, meaningful life, mastery not required. Now, in case we've not met, my name's Tim Low, and I help people create multiple income streams using their purpose instead of mastery so that they can live purposeful, meaningful lives. Now, the first thing I want to point out is that the truly wealthy, they don't get there through earning a good salary or saving money. Right now, don't get me wrong, these are both really important things, but it'll be a really long, tough slog if you want to be financially free by doing that. Now, that's because most wealth comes from investing, meaning owning assets that grow in value. Now, I'll give you an example. Tim Cook, Apple's CEO, he's worth $1.9 billion. His base salary is $3.4 million. That's a great salary, and in 2022, he got a $12 million bonus. So that's a total of about $15 million in pay. Not too shabby, right? But even if he saved all his $15 million, he'll need to work for 127 years to be worth $1.9 billion. Now, the secret is in his ownership of appreciating assets, such as his shares in Apple. Right, his total compensation for 2022 was around $99 million. 83 of that $99 million was stock options and restricted stock units. And he also owns 3.28 million Apple shares. Right, Mark Zuckerberg, Elon Musk, they draw just $1 in salary. So it's safe to say that most of us earn a bigger salary than they do. But unlike most, they're by no means scraping by. All because they own assets that grow in value. And that takes me to the number one thing you need to know about investing and growing your wealth, the easy, uncomplicated way. And that's understanding what investing really is. See, you need to understand what investing is because when you don't understand investing, you'll cling to bits of information from here and there, right? What this guru said, or what the latest indicator is, or the media reports. But once you understand investing, which by the end of this video, you'll see isn't complicated at all, then you'll learn to cast aside all that complication and be able to make up your own mind. And to do that, we'll be starting somewhere a little unexpected, because I won't start by telling you what investing is. We'll get there. Well, the first thing I find I need to untangle with a lot of our students when they first come to us is the difference between 2 common market activities: investing and trading. Okay, it sounds simple enough, but I'm consistently shocked at how often investing and trading are mixed up. You see, investing is just owning good assets and letting them grow in value. Now, trading doesn't care about whether the assets are good or what the value is, only the price movement. They're completely different things, and yet one of the most common things we need to untangle, not just for the newbie investor who's understandably confused, but for many experienced investors as well. Because this is really one of those huge ways you could end up losing a lot of money in the markets. I'll give you an example. What do you do when share price falls? Do you cut losses or do you average down? Well, a trader will say cut losses and sell. An investor will say if it's a good company, buy more. And I learned this the hard way. See, back in 2008, during the housing crisis, when markets fell nearly 60%, I lost a multiple 6-figure sum because I was learning from 2 different gurus. One was fundamentally a trader, and the other was fundamentally an investor. Now, one told me to cut losses and the other told me to average down, meaning to buy more. Now, if I had been as clear on the distinction between trading and investing as I am today, I would have likely lost a lot less or possibly even made a profit. That's just one example. See, I see people trying to invest using indicators like RSI and MACD and trading signals. I see people trying to trade using valuation. See, it's all mixed up. See, indicators are for trading because in trading, you don't care about the value. You care about things like sentiment and momentum. And if a stock is overvalued, it can go higher. And you want to take that ride. Whereas for investing, you care about the value. And that's why you do the valuation, not the momentum. Now, do you invest or trade or both? Do you draw a clear distinction between investment and trading? Let me know in the comments. And if you're getting value from this video, then like this video and don't forget to subscribe for more content like this. And if you're listening to this on podcast, then leave us a review. It means the world to me and a huge thank you in advance. See, investing is simple because when we invest, we only care about two things: value and price. Now, value reflects the quality of the company. And you must remember with investing, you're not buying a lottery ticket when you buy a stock or a share of a company. You're buying a piece of that business. And that business generates money. Because I believe that we must only invest in good businesses that generate money or good income-producing assets. In a video linked above if you're watching on YouTube, and in the description below the video and podcast that goes into that in a lot more detail. But in short, income-producing assets produce income. And that enables us to give them a value based on the income it's actually producing. Okay, that value reflects in part the quality of the business, but there's more to that which I'll get to in point 3 shortly. But for now, just remember that value reflects the quality of the business and the amount of money it brings in. So you need to remember that value isn't price, and price isn't value. See, Warren Buffett puts it like this: price is what you pay, value is what you get. So the price of a burger may be $10 and the value is a quick, convenient meal. So if price is below value, then it's a good deal for the buyer. And if price is above value, then it's a good deal for the seller. And as an investor, we use this to make sure we're getting a good deal when we buy and a good deal when we sell. An investor doesn't need to look at things like indicators, momentum, etc. All an investor cares about is that he buys when price is below value and he considers selling or taking some money off the table when price is above value. Simple as that. And now, point 3, which is closely related to value, and that's the quality of the business. See, a prime rib costs a lot more than a fast food burger. Right? They're both beef, but one's a better quality of beef and hence a higher value and hence a higher price. And for investing, you must only buy quality. Why? Because remember, we're buying when price is below value and we sell when price is above value. And ideally, we want the value to go up. Because if we buy when price is below value and then the value falls below the price, and now the price is above value and we sell, we're going to lose money. So we need to invest in good assets where the value will go up. And the best way to do that is see investing in a company as being an owner of that business. Not a lottery ticket holder, but an owner of the business. But a completely hands-off owner because we have a whole management team running the show for us. So what our job is to pick the right business and the right management team. Because as long as it's the right business and you've got the right team managing it, they're going to increase the income. And in an income-producing asset, increasing income means increasing value. And increased value means that whether a price is above or below value at that time, we're making money. And I'll show you how you can find that out using free resources online in a second. But first, I want to give you a gift. It's a 4-day lifestyle income workshop, and it's an on-demand video workshop, which I want to give you absolutely free as my gift to you for hanging out with me on this video. You'll be learning why trying to master your income streams has caused passive income to elude you all these years, and what you can do about it. What the wealthiest people and most profitable companies use to remain profitable and to grow their wealth and income in a risk-managed and sustainable way. And finally, why most stumble when trying to grow their income and wealth, and how you can avoid those pitfalls so you can start taking concrete steps to building your income streams and living your purpose instead of going one step forward and two steps back all the time. Now, I pull back the curtain on what I do for passive income, mastery not required, of course, and I introduce you to some of my favorite passive income streams I'm using right now that are putting money in my pocket even as you're enjoying this episode. All you need to do is to head over to start.purposetree.com/workshop, which is on the screen now if you're watching on YouTube, and in the description of this video or podcast. Just put in your email address and my team will send the 4 videos right to your inbox. You can watch it anytime you want, and it's fast and actionable, so pay attention and take action. Whether you're a beginner who hasn't the faintest idea where to start, or you've got income streams but they're causing you stress and taking up all your time so you can't live your purpose, this on-demand workshop series will change your life. It's completely free as my gift to you. Now back to the episode. Now, to tell if a business has an increasing value over time, we can look at the business's profitability. Is its net income, which is how profitable a business is, increasing over time? If it is, then its value is also likely increasing over time. If it's not, then its value isn't increasing and might even be decreasing. And that's because when we invest in a business as an income-producing asset, the more income it generates, the more its value is, and the less it generates, the less its value is. Make sense? Now, there's a lot of websites out there that show us how to do this. For instance, Yahoo Finance. Okay, just go to Yahoo Finance, pick any company, and under Financials, you'll see the net income for the last 4 to 5 years. Is it on an increasing trend? In case you don't know, TTM there stands for trailing 12 months or the last 12 months. Now, even if its income is on an increasing trend, how do we know that the value will continue to increase? Well, most businesses don't turn on a dime. If they're a good business with a good management team and it's been doing well, then something needs to happen for that to change direction. We can also click on the Analysis tab and you can see what its earnings per share is, which shows us how much the company makes in relation to the number of shares it has. We're buying shares and can see the amount of earnings for each share that we're buying. Now, I need to pause here and say that it's not money in your pocket because EPS, or earnings per share, is not dividend. Okay, EPS shows how profitable a company is per outstanding share. And earnings needs to go through a process before it becomes dividend that's paid. But the point here is that you want to see that the EPS is trending up. Because if you know that net income is trending up and EPS is trending up, then it's very likely that value per share will also trend up. And price often goes up in tandem with value. Although price is erratic in the short term, in the long term, it trends with value. So the price will also likely increase. And on this page, you can also see what analysts estimate the future growth of the business to be. You see, the key to growing your wealth and achieving financial freedom is accumulating good assets with value that increases over time. And if you want to delve into what a good asset is, you need to check out this video. And don't forget to like and subscribe. And check out this video if you want to learn to afford to live a purposeful, meaningful life.